Tariffs on Chinese EVs could quadruple in the coming days, according to reports, and consumer sentiment lowest in 6 months. We'll tell you more coming up on Business Matters. Good afternoon, and thank you so much for being here with me on this Friday. I'm your host, Don Ma. Let's go to stocks right away. Eked out modest gains today, and all three indexes posted another weekly advance. S&P 500 and the Dow were the gainers here, while the Nasdaq ended essentially unchanged. All three indexes were up for the week as well, with the blue chip Dow nabbing its largest Friday-to-Friday percentage advance since mid-December. But, you know, the biggest story today is the decline in consumer sentiment. We have more on that in just a bit. So, you know, nobody really wants to take a big position right before next week's crucial inflation data. We'll have coverage on that as well next week. Now, consumers aren't feeling too confident about the economy. In fact, they haven't felt this bad about it since November. So U.S. consumer sentiment dropped to a 6-month low in May. And this is amid growing anxiety about inflation, rising unemployment rates, and high interest rates as well. So the University of Michigan released its latest consumer sentiment index today, and this month's reading came in much lower compared to the last month. And it is the lowest since November, as I mentioned earlier. Consumers expressing worries that inflation, unemployment, and interest rates may all be moving in the wrong direction here and bracing for even higher price increases in the year ahead. So this consumer sentiment index is actually closely tracked by the Biden administration. So keep that in mind. And earlier, I talked to Chief Economist Peter Schiff at Euro Pacific Asset Management for why he thinks consumer sentiment is so low and for his outlook on the U.S. economy. Take a listen. Peter, great to talk to you again. Consumer sentiment out today, lowest in 6 months, it looks like. And Peter, let me just point out, it's not just that. The most recent jobs report, sharp drop in jobs added. Unemployment up. The most recent GDP estimate coming in low. And just yesterday, jobless claims, highest in 8 months. Peter, what's happening here?
Well, you know, if consumers only knew just how much worse it's going to get, confidence would be even lower. They're actually a little bit too optimistic about the future. What they're really concerned about is rising inflation and high interest rates. And the problem is interest rates aren't really high yet. And unless the Fed raises rates even more, inflation is going much higher. So the Fed is in a box if it tries to raise consumer confidence, because if it tries to fight inflation, which is worrying the consumer, it's got to raise interest rates. But that's already worrying the consumer. And so higher rates to fight inflation may cause confidence to fall even further. On the other hand, if the Fed doesn't raise rates or cuts them as planned, inflation is going to get a whole lot worse, which means consumer confidence can only go down. The Fed is planning on reducing rates, despite the fact that rates are still too low. But the problem is Americans have so much debt that even these low rates are too high. That's the main reason the Fed stopped hiking, because we started to see another financial crisis as the banks started to fail. And the U.S. government is in a bind fiscally. You know, every time the Fed raises rates, it causes budget deficits to widen, because now the government has to spend more interest to cover its debts. Plus, it also weakens the economy, so tax receipts go down. So as the budget deficits are swelling, that puts more upward pressure on inflation. And so as the Fed tries to fight inflation by hiking rates, it just ends up making it worse.
So are you seeing inflation flaring up again? Because we did see CPI go up for the past 3 months.
Yeah, well, inflation's headed back up. I mean, it only went down temporarily. That decline from 9% to 3% was transitory. Now we're headed back up. We'll be above 9% before we get down to 2%. I have no idea when we're going to get to 2%. It may not be for decades.
How's the consumer doing? Because if we're looking at the most recent earnings reports, I'm talking about McDonald's and Starbucks here, it seems like the consumer may not be on such solid footing.
No, he's on life support right now. The consumer's in a lot of trouble. He's got a record amount of debt, credit card debt, household debt. Savings are totally depleted. The cost of living has skyrocketed and is going much higher. And a lot of Americans are now holding down multiple jobs just to make ends meet. People are working evenings. They're working over the weekends. That's why we have all this job creation, because people are moonlighting. You need 2 or 3 jobs now to pay for what one job used to provide for just a few years ago.
Just a few months ago, a lot of economists, analysts, they're predicting a recession in the economy. Now nobody sees a recession. What's your base case for the economy?
Well, they're blind. We're probably already in a recession. I mean, a lot of the numbers that we're getting that indicate otherwise are probably going to be revised lower, probably after the election. But not only are we going to be in a recession, or we're already in one, but inflation is going to get worse. So it's stagflation. And Powell just said at the last press conference he doesn't see any signs of stagnation or inflation. And he's wrong on both counts. I mean, the signs are obvious to everybody, maybe except the people on the FOMC who couldn't see the 2008 financial crisis coming, who believed that the 2021 inflation was transitory. They're wrong again. This is stagflation, except stagnation is going to be more like depression. And the inflation part could be closer to hyperinflation. That's how bad it's going to be.
What does the U.S. need to do to turn the ship around?
Well, I mean, at this point, I don't know that you could turn it around. It's a little late for that. But there are things that we could do to mitigate the damage when, we collide with the iceberg or whatever we're going to hit. But what we need is dramatic cuts to government spending. We need much lower budget deficits. In fact, it'd be nice to have some surpluses to start paying down the debt. But the government is doing the opposite of what it needs to do. It's increasing spending. And so it's making the problem worse. So I don't see any political will in Washington to take the steps that are necessary to soften the impact. So we're going to, hit full steam ahead. And so, people have got to just brace themselves for that impact and do what they can to protect their wealth, because, the government's not going to do anything, and neither is the Fed.
All right. Thank you very much today, Peter Schiff. Always great to have your insight, Euro-Pacific Asset Management.
My pleasure. Here.
Shares of drug maker Novavax nearly doubled today after striking a licensing deal with French company Sanofi for its COVID-19 vaccine. The deal is worth up to $1.2 billion. Sanofi is one of the world's largest vaccine makers. It's going to gain a license to co-sell Novavax vaccine in most countries. The deal could help Sanofi to bolster its flu vaccine franchise and compete with rivals, potentially like Pfizer and Moderna here. And Sanofi will take also a 4.9% stake in Novavax for $70 million. And that's going to value Novavax at about $1.4 billion. This is nearly double its market capitalization. But, still a far cry from its peak of $20 billion in 2021. Now, under the deal, Novavax will get an upfront cash payment of $500 million to help strengthen its balance sheet. And besides that, President Biden's plan to electrify U.S. highways could be potentially hitting a speed bump here. And that's because Elon Musk's decision to lay off Tesla's electric vehicle charging team. So the Biden administration has announced plans to build 500,000 EV chargers. Tesla, by the way, was a crucial part of that plan since it operates the largest network of fast chargers called superchargers, by the way, in the U.S. But last month, Tesla reportedly laid off the entire supercharger team, although Tesla CEO Elon Musk seems to be walking back some of that decision potentially. Earlier today, he posted on X saying that, quote, Tesla will spend well over $500 million expanding its supercharger network to create thousands of new chargers this year. And rollout of the federal charging station program has been already sluggish. The Washington Post reported earlier that Biden's $7 billion investment has only produced about 7 stations in 2 years. And President Joe Biden as well is set to announce new China tariffs as soon as next week, including a major hike in levies on electric vehicles. This is according to Reuters, citing people familiar with the situation. Now, specifically, what we're talking about here is tariffs on Chinese EVs. They're roughly going to quadruple under the new Biden plan, and this is according to the Wall Street Journal. Now, the full announcement could take place as soon as Tuesday next week. Sectors to be hit with higher tariffs could include semiconductors, solar equipment, as well, according to one of the people. Details on the precise value or categories of tariffs were sketchy, so we're just going to have to wait on that. And to get professional insight into this, I spoke to automotive industry expert Lauren Fix at Car Coach Reports. Here's what she said. Lauren Fix, thank you so much for your time today. I know you're at the airport, so I'll try to keep this as quick as possible. One of the biggest stories today within the EV space is that President Biden potentially weighing tariffs on Chinese electric vehicles as high as quadruple the amount now. What are your thoughts on that?
Well, it's very interesting because President Donald Trump had already said in an event that he was going to charge China 300% in tariffs. So they just basically lifted his words. So this is actually Donald Trump's plan more so than is Joe Biden's. Problem is with the Biden administration is anytime they say we're going to do 300% tariff, you know it's not going to happen. It's just in order to get votes. It's about UAW, because what happens is if the Chinese start bringing cars into the U.S., they start opening dealerships, they're going to bring in low-priced cars. And what that really means is all of the brands that are producing cars here that are either U.S.-based, like domestic brands like Ford and General Motors, and all the others, including the Koreans and the Japanese, they're going to get hurt because they're producing product and giving us jobs. If they're producing product in Mexico, bringing it across the border without a tariff, it will destroy the U.S. marketplace, like it's doing to Germany and in other countries. And they're well aware of it. So we have to be really careful that when we start allowing all these to come in, since we're already using tons of Chinese components, this could be a serious problem. So keep in mind, keep your eyes on what these presidential candidates both say. But President Trump has been pro-UAW as far as keeping the jobs here, while President Biden is losing a lot of these votes. And so he's going to go out of his way to say whatever he has to get your vote.
Some counter arguments to the tariffs is that it hasn't really protected the American industry. I mean, what do you say to that?
Well, the reason is because the components that come in are not tariffed. And so if you're going to buy a chip, we had a chip shortage. If those chips are made in China, they're going to come across to the U.S. and there's going to be no tariffs. So why would U.S. manufacturers build them here in the U.S.? Now we have the CHIPS Act, which is what actually President Trump put into place, but Biden is starting to allow to go through, and they're going to build microchips here. The key is going to be the cost. Can you produce it here or lower costs and keep the jobs here or not? So this all comes down to when you put a tariff in place, how is it going to benefit the workers and the country here from an economic standpoint? And these are some of the big factors that have to be kept in mind. Although the average consumer is not even going to understand that the tariffs or no tariffs, they're going to decide on the presidential candidate they want. But a lot of this is because we're in presidential election season. If we weren't, you probably wouldn't hear anything about it either way.
Tesla laying off its supercharger team. My question to you is that going to put a speed bump into Biden's plans to electrify the U.S. highway and rolling out EV charging stations across the country?
Well, Elon Musk is looking about saving money. Everybody's in a very tough situation with the cost of everything because of the economy the way it is. So what he did is he shut down the complete electric charging station. BP, which is British Petroleum, we know them as BP Gas, they have an area called BP Pulse, which is fully funded by the federal government, and they're using that to buy up and basically start supplying the energy and all the service that's required to the Tesla charging stations, so it'll become more mainstream. This could be part of what the Biden administration made a deal with Elon Musk, but it could also be the fact opening this network up to more suppliers. So it's going to be a long time. There's definitely a speed bump in the charging infrastructure. The infrastructure, if we were 50% electric cars today, which is what they wanted, there's no way that the current electric grid could support that. We can't even support what we have now. We're already going into summer where we could have potential brownouts and blackouts in California and New York City as they shut down nuclear power plants and try to rely more on wind and solar, cut down natural gas and coal plants. The bottom line is you got to get this electricity from somewhere. And this is going to be a big problem that we're going to have to face, that electric cars will always be in the mix, but they will not be the sole answer.
All right, Lauren Fix, thank you so much for your time today. Have a safe flight.
Thank you.
Meanwhile, Target is planning to cut LGBTQ-themed merchandise from some of its stores during Pride Month this June, and this is according to a Bloomberg report. That's because backlash for selling their merchandise led to decreased sales for the year. Last year, Target was forced to remove some items from a transgender designer. There were also increase in customer-employee confrontations and incidents of Pride merchandise being thrown on the floor. The company says it will curate which items to sell in which stores based on guest insights and consumer research. And tech giant Apple is facing a growing wave of union organizing from worker groups across multiple states. So far, workers at Apple stores in Maryland and Oklahoma have voted to unionize. The Maryland workers are now weighing a strike, saying management has yet to meet their core demands. Saturday, they're holding a vote on whether to go on strike. It's one of the strongest labor actions taken against the big tech company yet, and it's far from the only labor challenge Apple is facing, in fact, in the U.S. Employees in New Jersey also holding a union election this week. And let's talk a little bit about cryptocurrency here. A cryptocurrency nonprofit has launched a new political action committee to raise money for crypto-friendly politicians. It's endorsing candidates running in the House and Senate. Now, Stand With Crypto is a nonprofit. It has 440,000 members. Its PAC joins a broader effort to put political candidates in office who support crypto and blockchain. 3 crypto super PACs together have actually so far raised more than $110 million this election cycle. So those are including Fair Shake, Defend American Jobs, and Protect Progress. This is according to Federal Election Commission records. The industry is facing scrutiny after FTX founder Sam Bankman-Fried was found guilty last year of stealing from customers. All right, now we're taking a short commercial break, but when we come back, we'll tell you why a U.S. company is suing China's 3rd biggest bank for tens of millions of dollars. And as well, the Biden administration added 37 Chinese entities to a trade restrictions list for allegedly supporting the spy balloon that flew over the United States. We have that and more for you after the break. Don't go away. All right, so what else is happening today? Let me go through some quick headlines with you. Republican attorneys general from 27 states and industry groups have sued the Environmental Protection Agency, and they want to block a landmark rule which requires power plants to significantly cut carbon emissions. The rule covers existing coal-fired power plants and new natural gas plants. West Virginia Attorney General Patrick Morrisey says the EPA lacks the authority to make the demands. And 2 Hyundai models and 1 Kia were the 3 most stolen vehicles last year in the United States. And according to a report from the National Insurance Crime Bureau, Hyundai Elantra compact cars were stolen more than 48,000 times, and Hyundai Sonata sedans were stolen almost 43,000 times. And 1 in 8 adults, just about, they say they have taken a GLP-1 drug like Ozempic or Mounjaro, and that's according to a new poll from KFF. Most adults say they took them to treat a chronic condition, for example, diabetes or heart disease, while about 40% say they took them to lose weight. All right, some China stories now. The Biden administration added 37 Chinese entities to a trade restriction list, and that's including for allegedly supporting the spy balloon that flew over the United States last year. The Commerce Department also said it was adding some units of China Electronics Technology Group to the list, and this is for allegedly trying to obtain American technology to support China's quantum technology capabilities. And the department also says that it has serious ramifications for U.S. national security. due to their military applications. And the announcement shows that the Biden administration is continuing to punish Beijing over the spy balloon as he seeks a second term in office. And more on that US-China EV competition that we talked about earlier with Lauren Fix. So China's EV maker Zeekr just started trading on the New York Stock Exchange today. Its shares rose as much as 40% during the day. NTD Sean Marshall has more.
Chinese EV maker Zeekr's IPO debut on the New York Stock Exchange marks the first major U.S. listing by a Chinese company since 2021. Zeekr is the premium brand of Chinese automaker Geely. The IPO is multiple times oversubscribed, two sources said, and analysts are not convinced there will be a rush of more Chinese companies listing in New York anytime soon. The number of Chinese companies that have pursued stock market flotations in the United States in the past few years has dropped after Chinese ride-hailing giant Didi Global was forced to delist its shares following backlash from Chinese regulators. What eager American investors might not know is that 5 people, including 1 child, were hurt when they were hit by a runaway Zeekr X electric car at an auto show in China last month. Video of the incident went viral on Chinese social media platform Weibo. To mitigate the bad publicity, Zeekr released a statement saying the electric vehicle's powertrains were not in their exhibition mode, but were instead parked in regular comfort mode, blaming it on the auto show organizers. Zeekr's first day of trading ironically comes at a time when U.S. President Joe Biden's administration plans on boosting tariffs on Chinese vehicle imports to the United States. Sean Marshall, NTD News.
And China's car exports surged to a record high in April. Data showed it today, but its domestic sales slipped compared to a year earlier. EV price competition in China are getting intense. Consumers also more cautious about spending on big items during a shaky economic recovery. Car exports jumped 38% year-on-year, according to the China Passenger Car Association. China has been actively exploring South America, Australia, and Asian markets for exports. We may see another sriracha shortage in the near future. California-based Huifang Foods says it will not produce any more of the popular hot sauce until after Labor Day. The company says the temporary pause is because the red jalapeno peppers used are too green, affecting the color of the sriracha. So the company's red winter jalapeno peppers are actually grown in Mexico, where there is currently a severe drought. So hot and dry conditions can disrupt the ripening process and prevent the peppers from achieving their prized red color. Sriracha makers other than Huifang Foods, though, haven't reported any pepper shortages. All right, and that's all the stories we have for you today. Thank you very much for watching. And if you have any feedback for the episode, please let me know. You can email us at business@ntd.com or leave a message online. I do read them all for every episode. And happy Mother's Day. Don't forget to get her something special on Sunday. Thank you for watching, and we'll see you back here on Monday.